Brilliant. Should be good to go now. So streaming is on. Gonna just double check it's on here live on the channel as well. I believe it will be on live. Yep. So it shows that we're streaming. Good. Unlisted. What is going on? I'm not trying to be unlisted. Okay, cool. So it says we're live. Just want to make sure this stream is live. So let me quickly go on to a private browser. Yeah, sweet. Seems good. Seems good. Yeah, sweet. Yeah, we got questions. All right, good. Is there an echo as well? How does my voice sound? Is it good? Or is it a little bit echoey? Hey, what's going on? What's going on? Baby, yeah, baby. I've just been testing the mic to make sure it's working well, but I just wanted to make sure there's no echo this time. Yeah, it's all good. Perfect. Yeah, that's what we want to hear. Okay, let me put this over here. Sweet. Cool. And how's the stream? Is stream looking good as well? Hope it is. I hope the stream is looking good. I can't see it. I'm gonna have to wait and see in the record. Oh wait, actually, I've got it up here. I'll put it in 1080p, full screen. Yeah, it looks good. It looks really good. The stream looks good. I'll put this weird smoking background on it as well. So I had like a random video. Change it up from time to time. Yeah, so essentially, I had a few things on watch this morning. Don't know about you guys. This morning I had EU, GU, and AU. I know NJ. I had GU, NJ, and AU, and then they just kind of moved a lot more aggressive than I anticipated. So stayed away. Right now, I am waiting for a bit of a more of a continuation to be forming here. So I'm going to give EU a little bit more time. I'm going to let that develop. So that will develop. AU has kind of pushed out a little bit further. So until the daily really just gives me a signal that we're closing up here, that's a good sign. If we start pushing back down there, then that's a sign from the momentum that we may not be ready to sell just yet. We might be seeing the DXY come back up to the upside. So right now I do need to see a follow through from this. This is your typical price action where you've tapped into the high value area. Maybe we consolidate a bit here and then we drop off, and that's what we're looking for. Same in coordination here, some consolidation here, move higher. Consolidation to move higher here now as well. So it's time to wait for some sort of pullback into those areas and then go long. So I'm looking for basically that to move to the upside. AJ, you know what? I wanted to get the long, but I wasn't looking to take a trade right on market open. And then when the market did open, we just started just rapidly moving to the upside. So now that we're positioned up here, it's a lot different to being positioned down there. So it's a different trade in itself. So it's kind of one that I am kind of trying to wait for some sort of level of a continuation in this area to now play to the next point and then basically see it accordingly. But I need to see something a bit more weighted than what I was looking at before. Or I could have taken like, 5 1-hour candles there for a refined risk entry. That would have been fine for me. But now I'm going to have to wait for something a little bit more developed in this area here. Same with CJ, looking for that development. EJ, same situation. But the nice thing is you can see how deliberate it is now. We can see that with very clear momentum, we are literally just waiting for structure to show itself. They've all moved to the upside, invalidating the shorts. So the longs have pretty much on the table there. Aussie CAD. I was looking at Aussie CAD long, same situation. It just pushed up more aggressively than I could have really done anything. It just really started pushing, no continuation just yet. So I'm going to leave that be and let that kind of develop and then catch it when time's right. I think GA is just developing right now. So it's underdeveloped. I can't really speculate too much on what it's going to be. It could be a whole bunch of things, but really and truly, please put your box at the corner. Oh, I see, I see. This one. Yeah, I could do that. I'll move it down here in the corner. Yeah, sweet. So pretty much waiting for that to develop. It's going to take some time, so let that do its thing. If it develops in this area, that will be pretty good as well. So I just want to see it just do whatever it needs to do in this area here, and then eventually comes back up, and then we can get that sell. So it might not shape up this week, it might shape up this week. Just really got to wait and see how that develops, but that will be a really good trade if it does. The next one I was looking at was USD Swiss. I am predominantly interested in shorts, but you know, right now they could be a bit tricky to catch up here because price action is very messy. Well, it's coming across quite messy at this point, but a lot can change if it just drops off. Gives you a clear continuation here. You know, that's a no-brainer. You get a clear set entry right there. You get involved and you can play to the downside. It's kind of what I'm banking on, but right now it is corrective. It's kind of tapping into a not very so significant area. So I want to see that this is failing as a first continuation. It's coming down, and then it was just basically a bank on retest of that. But again, it's too early to tell, so I'm not really too interested in it. This is looking like early signs of a sharp pullback. I just don't like the fact that it's kind of coming off the bat of this now. So even with that becomes some sort of V shape into this, I would wait for this to develop into something like that. And even at that point there, it's kind of, you know, not sitting on something majorly significant, but if we look at the origin of this total move, there isn't really a set area. You could argue that's the origin, So this area is not so significant, but at the same time, if we start pulling back from there, it would be an insurance entry play within this, where I would look to go short, and then I'll manage it a little bit more aggressively, understanding that this could develop into something a little bit more weighted in this area. Same reason we were saying with the DXY developing into something, this could be some sort of clue. So yeah, volume increased a bit. NJ, this is the trade I was looking for. So there was a tiny little flag in there. I wasn't interested in that. I wanted to wait for something a little bit more defined, a little bit more developed. NJ, I was hoping that we could potentially just sell off, come back, retest this, and then go. And then this would have been like kind of London session open, but instead we just pushed higher, which is completely fine, man. Like sometimes these things happen, these things do happen. We don't always get perfection. It's just where we were positioned. I didn't want to go with something so aggressive and tight in here, where I was kind of more on the side of if we can get something a little bit more weighted, but within that channel, it would have been more than enough for me. So it was personal preference, but if you want to see the trade that did shape up or was the one to go, it was this one here, literally, that one right there. You can see why it was more than enough. You could have taken it in there, whatever, on the break. But again, I would have liked to see this kind of become corrective, squeezes higher, sells off, taps into these areas, and then goes. And for me, that would have been a lot nicer of a trade because it would have had the confluence of, you know, sort of this whole section is just really holding. So that was that. It looks like there could be something forming in this area here, very similar to what we saw there. Could be, again, something in this situation here. Maybe we get this one developed over here, and then you get something like that. Again, that would still be valid. You could take the trade here, say you get a washout there, and it comes back up, you can take that to the upside. And with the stop loss protection, you know, you're still walking away with like a 2.5 to this point. Odds are it's not going to stop there. It's probably going to have a sharp pullback, but then it's going to move higher. And then this turns into quite a big trade. So it's pretty decent in its own isolated trade. And then if we go down to wheat, I am still waiting on wheat. So I would like to see wheat develop into a bit more of a defined flag. I don't know if any of you guys have wheat on watch, but essentially if I zoom out to the daily, you can see it here. We are selling off, it's corrective, but you can see that we had a sharp pullback, right? We didn't reject from anywhere significant, by the way. If you just go back to the weekly, you can see that the significant point was over here and we left a gap. We started squeezing to the downside, then we had some sort of impulsive push to the upside, and then you can see a really nice weekly candle here. You see that nice bearish weekly candle, wicking through that, really good. On the daily, we had really nice daily momentum pushing back in, which is great, followed by a second candle and now consolidation, which is extremely normal. Now during this consolidation is usually where my edge tends to play out. So I'm waiting for some sort of structure here. If this turns into a V shape, I don't know if I'm going to opt in for the insurance entry on it. It's definitely valid, but it's not the one that I'm looking for. I would like this to kind of gap, near miss this, sell off, create a base, comes back up, takes up all those gaps, retraces, and then I can get involved there. And then I can at least play it down to the first point here, and then play it down for the bigger move. And then probably, if this is going to be the run that I think it is, there could be a number of scaling opportunities on the way down. So that's why I've kind of got wheat on watch this week. GBP US dollar, I think I went over this one at the beginning, but yeah, so essentially I'd like to see this kind of come back in here, test this low, and then we get a retrace, and or maybe an insurance entry and we move higher. It's a great trade in the sense that, you know, we've basically got it like this, and price will be situated in these areas. Even if you got in with a moderate stop loss after a washout or whatever, 25 pips, you're still good to go. You know, you can still mitigate against a third touch if it does, you know, develop eventually. You could take the break even most likely, but to the top of the structure 1.4, and then you're literally playing the bigger move here. So I'm a fan of GU, just need to wait for that one. So I caught Aussie 200. This is a trade I caught, but I'll go into that one in 1 second. And I'm looking at Euro Aussie as well. So Euro Aussie was more so on the sides of this. It looks like it's underdeveloped. It looks like it's probably coming back up, does this, and then maybe, you know, you get something like that. That's something I'm more of a fan of, because then what we have is an internal structure to it. If we get an internal structure amongst all of this, I would be more for a trade like that, where I could risk entry that I could probably go a little bit tighter as well with 25 pips on an EA trade as well. And then I've got about a 4-to-1 to this small inflection point over here, which is probably the trade that I'll be looking for. Bear in mind, there is probably a bigger move in there, but I'll probably be looking to get out aggressively at about 4%, see how price responds to this area, and I'll be out of the market. So I don't think that trade's going to shake up today, given how the time of day is and stuff. Probably could be an Asian session trade. So right now, currently, I'm not trading Asian session trades, but if I happen to be up for whatever reason, or price does shape up a lot quicker than anticipated, it'll probably be a insurance entry for the next day, but I will shadow trade it just to have that in there. So going into the trade that I did take, I'm going to have a look at those. Okay, let's have a little look at that in a second. Euro USD short for the 4-hour sell, which should be around about now. And then newest New Zealand dollar Swiss insurance entry. What do you think about this? I'll have a look at that one as well in a second. So having a look at this a little bit closer now, we have Aussie 200. So what I do like about this is if I zoom out on the daily, well, actually let me start on the weekly. It paints the best picture. So the weekly, what you can see here on the weekly is we've tapped into the low there. We've done the bare minimum. We've done what, you know, the least we could ask for. It's come and tested the low. It's got 2 tops, 2 bottoms at this point. This is a great area where we could potentially be seeing price come back to the upside. That's the bare minimum of what we're looking for. We then can see it on the daily where, okay, price did make its way to the downside. It didn't break it significantly, but it tapped into it. So this is what I mean by the bare minimum. It's basically shown that we've responded from that low, and multiple times as we reached it, we had sharp rejections. So this whole area here was buying for bigger players, and then we finally tapped into it, and then that's the sign that we may be ready to go. So when I saw it on the 4 hour, I saw we had this very nice morning star formation here, which shaped up on the Sunday, or Friday. Going into the Sunday, we then had the confirmation of the next candle. Now, the one thing that I really did like about this particular price action was we're leaving with momentum on the 4 hour now. So if we've left with momentum on this one, the second candle has left with momentum and it hasn't left any gaps, and I go to the 1 hour, I can then see, okay, we had an area here where we could have potentially turned around. We failed to turn around there, which is great. We continued with momentum, and then it looks like this could potentially be more of a momentum filled run. There's the potential for this to develop into a 3-touch. So taking this trade, I had to consider that into my trade thesis, that if I take the trade on a 2-touch here, there's a side of it possibly developing and coming back down, but also on the side where we have this momentum coming into the market. And as I showed you multiple times when we came here, we started already buying. Does it really need more volume in this area? Does it need to accumulate too much? And with that thought process in mind, I kind of then decided, you know what, if we get a decent retrace on the 2-touch and it's kind of confirming this as a base, I'll look to get involved. I'll put additional protection just in the case that I'm wrong, and hopefully I can mitigate against it. So you know me, I could have gone with around about 12 pips, but I added a few extra, I put 18. I think 18 is more than enough in terms of protection. If I go to the 5 minute, you know, you had this little bit here. It's nothing significant, but I was just like, you know what, if it is it really low volume? You know, that was something that I was trying to sort out before. Give me a second. Yeah. Lock filters. Let's see if I can put. That should be really loud, I think. I hope that's loud enough. Sorry if it's too loud, you can just turn the volume down. Just give me a thumbs up in the chat if it's loud enough. But yeah, so basically, that's basically yeah, okay, good. Yeah, so basically, that's basically what I'm looking at now. We've tapped into the low. Didn't really go into the 5 minute. I didn't see it necessary, but the 15 minute, when we confirmed there, that's when I just literally took the trade. I took it literally on the 15-minute close right there. And then boom, I was set into the trade, and I was very, very happy with that trade. So we'll see how that develops. If it comes back down, I'll be down in these areas for a break-in. Maybe I'll take the loss and get a re-entry, or maybe I'll take the break even. I can't really tell you at this point because price is still developing and moving. At the same time, we're tapping into these areas here where you can see if price wanted to turn around, it would have done so in these areas. So the fact of the matter is this doesn't look like a turnaround point. It looks like a point where price just consolidated a bit. And if it's going to go, it's going to go. And most likely it will use this to retest. So my entry is kind of in some ways protected down here, as long as we can get to the next point. So that's what I'm kind of banking on right now. Waiting on the 1 hour. I do want to see this develop further up before it gives signs of turning into something here. Quite happy with the trade. So let's go into some of the other ones and we'll come back and have a look at this one later. So let's start with New Zealand Swiss. So New Zealand Swiss, do you know what? New Zealand Swiss, I can see what you're looking at here. I was a bit too zoomed in. Let's have a look on it on the weekly. Okay, so price is still selling off. It's a pretty mad sell-off, to be honest. It's all the way down here. Now, I don't see any signs of a buy, really and truly, and I wouldn't be looking to buy this at all. But let's get in a little bit closer. So obviously riding the wave continuously to the downside. You know, we've basically came in there. Let's have a look at this over here. And then you've got this point over here, and then you've got your absolute low there. Then we go to the 4 hour, and then we see it on the 4 hour. Look, okay, look, I'll tell you something about this, right? Price is a lot more reliable in these areas. So if you were taking this trade, price is a lot more reliable here as a retest of the failed this became your V shape, and then it comes in here. This trade is not a bad trade, but you have to realize one thing about it, right? If you're looking at this as the overall sequence to the downside, you want to be kind of on the ball of, if you measure this up, right, and you measure it from the bottom to top, it's already tapped into 90% of the range, this particular range, right? If it's tapped into 90% of the range, there's a possibility that it could at least come back to 50% region, right? It's just something that when you've tested it and you looked at it, this region here is so close, the odds are this could extend a bit further. So you want to be cautious of that. If you don't look for a V shape, you don't look for a pattern like this in this area for shorts. So that's something you want to bear in mind. A V shape is much better higher up in the run here. And if you can test that, you can go through your data, you can go through your V shapes, and you can see that for yourself. Coming off here, retesting the back end of this, where it's failed to continue further. It's tapped into a small little hook point there, came in correctively, sold off, it's selling off correctively. This has elements of it potentially pulling back a bit deeper. So you would have essentially taken the trade here, in that region there, stop loss above, 4 to 15 pips, you'd walk away with about a 4 to 1 in that region. And that would have been your trade. That should have been the trade. Honestly, that's the only trade that I could have really entertained here if I stayed on the 4 hour. If I went to the 1 hour, you start to get involved in the bit of the mess. So you'd have to kind of read through price action and really start, waiting for something clear. But if you got a clear insurance entry somewhere in there, you could have potentially rode that wave too. I think right now, with the facts of the matter is, if you're zoomed in like this and you're looking at the trade like that, you're too zoomed in. You're genuinely too zoomed in, because sometimes that can feel like it's tapped into nothing, so there's a gap. But in truth, what it's done is tapped into the 90% of the range. And what we know statistically from the data that's gathered, when it taps into 90% of the range, there's a high probability likelihood that if it's, for example, an undeveloped range, then it's going to pull back to at least 50%. And understanding that your 50% is over here. So your 50% is there. So that's just something that I would keep in mind as well. Like when you're looking at this trade, don't try risk entry it here. You could take an unnecessary loss. I'm very, very much sure of that. You're better off just waiting for this to kind of come up higher and then sell off and give you some sort of insurance entry to go. And then you're basically playing it at that point, and then understanding this can develop into a whole bunch of things at this point. So you'd have to be more aggressive on your management, because again, you're playing in a territory where it's a lot more difficult. So that's kind of the thought process behind Swiss, New Zealand Swiss. Better off higher up in the run of the range, lower probability and more risky and a lot more difficult to catch. If you had something in the signs of it came here and then it developed something like that, then I'm kind of for this. I'm for a trade like this, because you're kind of supported by price being contained within this structure. So then you can play that to then filter the downside. But because it's already tapped into it, it hasn't really reached 50, there's not really much for it to retest. You're playing it off a random little beginning of the consolidation there. It's a trickier trade to trade. The thing is, in the moment, it can look like a great trade on the 4 hour. It can start to look like a great trade, but then this can just continue impulsively moving higher until it decides that, okay, we're coming back down. And then you're stuck in a trade like that. So be careful. Just going to do Euro USD. So Euro USD, I did kind of go over this as well because I do have it on watch. I'm waiting for more development on this. So I'm going to be waiting for something like this, where price gives me a structure back into these areas. And then when price taps into these areas, I'll be looking at some sort of retrace, or if it's a very sharp move into it, I'll be waiting for an insurance entry. So I'll be waiting for that push up. So I'm going to be waiting carefully. What I would like to see, and basically what I'm looking for, is this being a corrective middle section into this section here. So if it's corrective, it's showing that price is accumulating a lot of volume. Then if we get a push up and then we get an insurance entry here, that will be such a great trade to get refined on as well. Maybe even 10 pips. I'll probably go about 10 pips. Yeah, I could probably get away with that. 10 pips on that. Very happy with that trade. If I wanted to go extra protection because I was in drawdown, I'll put my stop loss around about there and still play the same trade with a larger stop loss. Overall, at the end of the day, I'm going to be looking for the risk entry. So I would like to see elements of a structured approach. So maybe if price did something like this and then kind of came in, and then London session, we were down here, and then price kind of just hovered around and eventually went. I would like to see a trade like this where I've kind of got more development to it. It's come in there, it's had enough time, it's developed, and then it's gone. Odds are this one could really mess around. It could go through Asian session. So that's something as well that I would have to accept. If price flies over Asian session and then it comes down to London session and price is not really where I want it to be, I'm going to leave it alone. I'm only looking at longs. I'm not looking at shorts, even though, you know, we've tapped into this. And you can say, well, what about the 4 hour? It looks like, you know, we've had a 4 hour rejection on this point. Yeah, it's correct, but the only time I'm going to look for shorts is if we break this, really. If we break this low and we sell off, and then price comes down here, and then we get something more developed in here, this is the only time I would kind of really want to entertain a short. Okay, not that large, maybe within here, right? That's the only time I would want to entertain it. The reason being is I don't want to be caught into something that could develop into a long. So for example, like, you know, we could be doing this and then price taps into the low and goes back up, and then that becomes your larger bull flag that coincidentally retested this. Okay, that's also a possibility you have to bear in mind. That's why I said if it's a sharp sell-off, it will kind of be the clue. So it's these sort of small little intricacies in details that kind of give you that clue that you're playing with a much more unusual structure. So right now you need to be careful that this doesn't develop against you, and then you're seeing this corrective and it's super corrective, and then it correction comes into here and then messes about a bit and then sells off and then does that. You don't want to get caught up trying to risk entry it here because you're not supported by enough, right? Simply it being corrective is not enough. It being structured is more enough, but it's not enough as well. An insurance entry is better protection. It's also DXY dependent. If the DXY is showing good signs of price moving and it shows some structure, we can take advantage of that. If it doesn't, then it's one that you're going to want to have to be a little bit more careful with. So if I see something like this, okay, I don't think that's going to be the picture. I think if it comes up like this, you know, you might see something a little bit more steep, and then you've got like a bit of an override there, and then you're basically going to have to read that price. And when you zoom out and look at it, you're like, ah, the trade was there. I just was too zoomed in. So get into the habit of zooming out a little bit as well, so you don't get caught up in it. But if you're looking at the 4 hour on Euro USD, you're not wrong, but also at the same time, you have to be able to read the bigger time frame. And right now, if you look at the bigger time frame on DXY, because the DXY is the dominant pair, if you remove this ray line, it's kind of done enough at this point. You've basically rejected, you've had momentum, and you're following through. Now you're consolidating for the next continuation. That's where people are getting accumulating, getting taken out of the markets. Are you going to be a part of those people? So you want to get positioned really well. And then at the same time, correct, this could come back up higher. At the same time, this isn't usually, this is a good sign of the beginning of a reversal to the downside. Because as well, if you mark it up, you know, you've approached it like this, 1, 2, 3 into this, tapped into that, we've rejected well, showing momentum. Continuations down here could be very, very good or very impulsive, as we've seen multiple times with the DXY. You want to be careful. That's the only thing I'm going to say, really. So think about positioning. Don't, because you get involved in the short on the 4 hour, don't neglect the long on it as well, because where you might be just looking at the shorts right now and price is just hovering around like 0.5% for you, it then comes down into these areas, gives you a great confirmation for a long, but you're trapped in the shorts. You might then get tagged out because price just pushes up more aggressively. There is some news as well this week. CPI on the 13th. So, you know, we will definitely see some level of probably aggressive price action. I do think a sell could come in because, there's a very clear point down here where price could just really drop off. But again, it's not completely necessary. Look at the DXY. DXY could just, CPI comes and then suddenly DXY is all the way down here. And then you're thinking to yourself, oh man, but on EU, it looked like we had a gap here. But then you go over and you look at some of the other pairs like GU. What reason does GU have to go low? Like it would have to really, really, really sell off and really start selling off now in order for it to get to those points down there. So I don't think it's completely necessary. As well, if you look at it on here, you'd be well positioned and then CPI would come around on the 13th. You might already be up here somewhere running, call it around about 6%. You could lock in aggressively, 5% if you really wanted to, or you could just take the 6%, walk away and let CPI play out. These are the sort of good options you'll have if you position yourself well enough now and you don't overtrade and you preserve that capital. All right, completely fine. US 100 and the NASDAQ. Okay, let's check out these indices. So there was this trade this morning that I did have on watch as well. And I was tempted, but I didn't want to take it because I wasn't looking to. I was a bit put off by this little gap here as well, to be honest with you. That little gap put me off. But you did have this, right? There was that, it had a middle section to it as well. The trade was there. It was a great trade. I don't think there was anything wrong with that trade. I just personally stayed out of it out of preference. Again, I was looking for S&P 500 recovery this week. So, whilst this appreciates, I'm still making money in other investments. So this is still a good sign. I like tracking it. I like monitoring it. There's definitely potentially, a room for 13 to 1 here if you did catch that trade. I would be personally getting out for a 4 to 1 on this, even though it's a bit early. It's all about stacking those wins for me. So I would be looking to just get in and out on this up into these areas and then basically evaluate differently. But trades are looking good. I would say that the S&P 500 definitely had a good trade there. US 100. Same situation. It's the exact same thing. It's just if I mark this on here, even if you mark it on here, I think it was borderline. See it there. Momentum came in. There's even arguably your daily swing play was in there, but wasn't a big fan of the wick. And then you had your little trade in there, London session. So the trade was here, cleaner on the S&P 500, not so clean on here, and then the US 30, not so clean because it was a bit more irregular. But you'd basically price that out because that was more so your market open. And then when markets start to stabilize, it was stabilizing within this range. So, you basically see it as this is your larger piece of price here. It's failing, it's creating continuation at the top, and now it's the burst on the volume accumulation of all of that. Same thing with the Aussie 200. It's the exact same thought process. I used the S&P 500 to get positioned even better on on Aussie 200. In fact, you could even say that I saw the I saw the S&P 500 and then chose Aussie 200 over it based on it not being so aggressive with these wicking swings. We don't get huge sell-offs. There isn't too much news tied to the Aussie 200 as well. Whereas, when CPI and things come, pairs like my S&P 500 trade could swing back against me really aggressively, whereas the Aussie 200 may not even do that. So I was quite happy with this one. Waiting for a bullish flag to develop on it though. So if I just got S&P 500, yeah, I would say that you need to play more for momentum play because this is clearly going somewhere. So it's not going to start accumulating volume here. It's most likely going to get here, right, before it does something. So you want to kind of get down to the 5 minute now and you want to wait for this, which I think you're waiting for, right? And then you get something like that and you go long. It could be tricky because it's then coming into New York session. So if it's so close to New York session, I would probably personally just wait because this could just maybe even dip a bit lower, do a bit of a spike into New York and then just go. Things like that. I notice a lot of the time it's better to get positioned early on in the day. So when New York session opens, it either plays in your favor or it takes you out for a break even. Whereas sometimes when you're playing into New York, you're basically playing into when the volume's coming. So it's like playing chicken with a train. The volume's coming, and you're basically you're basically standing in front of the train, but you're basically speculating that I'm going to get out of the way before the train hits me, and I can do it in the last second. When you do something like this, it's basically waiting at the train station, knowing that there's a high probability the train's going to come, but it's going to continue going in the direction that I'm getting involved with it. GC long. Let me have a look at GC long. I assume that's GBP CAD, not GBP Swiss, because if it's GBP Swiss, I'm also waiting for price to get to these areas. I would like to see it on the 4-hour though. I would want to see a 4-hour candle on GC in that area, and I think that would be really nice. More importantly, a daily candle would even be better. So I think somebody mentioned New Zealand Swiss. I think GBP Swiss is much nicer in my personal opinion. But I'm going to do GBP CAD because I'm pretty sure that's what you're looking at. I had GBP CAD on watch and I think I removed it, right? I'm going to tell you why. So this looks good. It's come down in, it's basically tapped into the origin of that correction. It's accumulating now, most likely coming into this point, or even more so interesting to that point. But I think this is probably the real target zone area, this one here. So then I go to the 4-hour and I look at it a bit closer and I'm like, well, it's irregular and this isn't my typical price action structure. So I'm not interested in it. That's basically what I said to myself. But when I look at it on the 1-hour, if you're playing it like this, yeah, sure, that's a structure in itself. I can already see it. You can make it. It's just not your most typical price action, you know, in terms of what it is. It's still part of like something irregular, but yeah, you would take your trade pretty much where we're sitting now. Stop lots. You crop it if you want, doesn't really matter. Depends on how big your spreads are. And then at least manage it to break even by the time it gets here. And then you're basically playing the move down here. And then if it gets there, you're running a 6.28. So I like it. I genuinely think that's a cool trade. It's a very intricate, takes one to really kind of read price action to see it. But yeah, you have your 1, 2, 3. First touch is subjective. The retesting section was here, essentially retesting there. So yeah, I mean, I'm not so bothered about the retest. I can see that there was a little bit of a consolidation in this area here that it kind of met with as well. So there is a lot of supporting price action there. If I look at it on the 4-hour, 4 hours consolidating, so that's kind of a good sign. Right now on the 1-hour, we're getting a pretty decent candle here as well, if we look at it. But the problem is it takes up half of the structure. So it's a crappy one, but yeah, it's retraced more than 50%. So the bearish sentiment is definitely in if that closes. 15-minute just closed. I think the hourly is about to close. It's closed here. I would say if you're going to get involved, probably wait for the 1-hour now because you're 10 minutes away. But you take the risk of it just kind of plummeting off against you, which you have to learn to accept sometimes. That 10 minutes could be the most valuable 10 minutes because it could just retrace, come back up here, and it's no longer in the same formation. And the next thing you know, it develops into something a lot more challenging, which I don't believe it will do what I'm about to draw, but it turns into something a little bit more challenging, and then it develops, you know, like that. It comes up, and then you've basically had this sort of squeeze into here, and then that was the area where you wanted to trade the short from. So I think you get involved here. If it pushes up against you and then rejects in those areas, then that's your second trade and your final trade there where you try to short this to the downside and you get positioned with a better stop loss. But I'm happy with a 15-minute on this, really. If you're genuinely happy to take this type of trade, knowing that it's irregular and it's got all the elements that I described, great, do it. But personally, I would leave it alone just because it's not my typical structure. You know, it feels very squeezed. It's early on in the week. I could find something better. I don't need to push myself into something like that. See the questions. Yeah, cool. Let me see what's going on here. having a look at some of the price action. Give me 1 second. Okay. Gold. Somebody messaged me about gold just now. Let me have a look at this. Yeah, so gold is a tricky one. The silver is a little bit better because of where it is. If you get consolidation in here, go long. Like, don't hesitate on it too much. Right now, you do have some sort of internal structure in there as well, where I get that. But if you get clear consolidation where price, is giving you this and it's hovering here and it kind of just gives you everything you need, I don't see why you wouldn't want to take that, go long, even if you had this, because nothing is confirmed about that. We've basically broken above here. But if that fails, if the long fails here, then you've got your clear message from the market. If that fails and it just sells off here and then gives you small consolidation there, that's your first flag to go short. And then you basically take the short there. So it's a win-win situation. You take the loss, but then you get the clue. And then with the clue, you basically make more money. So, at the end of the day, I'm happy to play both sides. I'll probably go larger stop on this one, maybe roughly about there. But yeah, so that's the long. I was kind of going to put silver on watch as well. I kind of liked silver, but I just had so much on watch. I just didn't want to overdo it. But you can see the whole trade idea here. With gold, it's slightly different because, yeah, you could argue that if you made something up, there could be something in here. But right now, looking at it, we've broken above this. We're trading up in these territories. Something developed in here as a long continuation is what you want to be waiting for. If you've got gold, most likely a lot of you guys have gold on watch. I wouldn't be surprised if, a massive majority of people had gold, but yeah, continuation like that, you can get positioned however you want and then basically play it to the upside. And that looks like the true range of what we're playing, not this section down here. We're actually playing the bigger range here. I don't see this giving me signs of this selling off from here until it does sell off. But silver could be the one which is positioned a lot better because if gold recovers to all-time highs, silver has a better run ahead of it. That small trade that you thought, okay, I'm going to just try that turns into like a 19% trade. The gold one, okay, the gold one actually could be bearing that in mind, so all-time highs. Let's say I even went with around about 15 pip stop loss. Yeah, I got about 5-1, and then I've got about 20-1 to the high there. Yeah, gold could actually be a really interesting one, really and truly. Let's see, palladium, UK oil. Yeah, interesting. Copper. Maybe copper for the sell, but I'm not going to sell this. I think a lot of these precious metals are cocoa. I know AK took this trade for the long, but probably got out because you could see clearly it's done that now. So yeah, over there you could probably pivot your position if you were not holding too much of a bias. You could pivot it on that candle there, take the break even and reverse it to the short. I'd say the short on this is quite nice. The short on that was quite nice because that could have a long way ahead of it. I don't think it's coming down to zero. I don't think it's going to come down as far as people anticipate because there is still a gap there. It's just a trickier one, but yeah, it's possibly a trade there. Oh man, I'm so interested in wheat, but look at corn. Hang on a second. Is that going to be the trade? Did I just see a 10 out of 10 trade? Damn, that looks good. I don't know about you guys, but that looks really nice, especially on the 1 hour right now. I see it. Oh, but it's tapped into this low here correctively, pushed back up aggressively. It's in the middle of this range. If we get a nice confirmation, what we're playing with, let's say if that does confirm quite well there, and I put stop loss remotely in this region here, I'll go probably a bit extra, 15 pips. I've got about 3-1 on that. I can go insurance entry. I think corn spreads are quite high. I'm not too sure. Last time I checked them, they were quite high. So yeah. But anyway, for a trade idea, if that retraces and gives us pretty decent candle there, heavy bodied, let's say, trading it into this low would be pretty decent. And then probably actually playing it for the bigger move to the downside here. Yeah, not bad at all. Play for a 5-1 into that section there. Looks pretty much okay. I'm more interested in this trade personally. Soybean, nothing there. Sugar, not much. Let's see, back to the Aussie 200 trade. Okay, so it's still hovering around. It's not moving the way I want it to move just yet. Looking at it here, we have the override. Patience, really. I could move to break even actually, and that's probably what I'm gonna do. What's the 1 hour? Yeah, I'm gonna move my stop loss to break even. Yeah, let me move to break even on that. Very soon, actually. It's not showing it. I'll see how the 1 hour closes on this before making any decision, because you know, next candle could be there, we get a small wick, comes down here and just continues higher. You know, we've all been through that, so let's mitigate against that, and not be too quick. GBP US dollar, great signs. That's a really nice candle right now, where if I just remove this, you can see that formation in itself. Price is just squeezing sideways here. That's exactly what I want to be seeing. That's exactly what we want to be trading right now. We want to be seeing price consolidating, moving sideways. This is most likely going to be my New York session trade. So we are currently around about 11 o'clock now, UK. I'm going to do my session review. So I'm going to put up the document. You're not going to be able to see it, unfortunately, because I'm sharing a different screen. But I might be able to share that. Give me a second. Nice. Okay, cool. And if I pull this here, yep, cool, that's good. And then my daily forecast was there. So I'm just going to put it here. What's the date today? Today is the 10th, I believe. Yep. I'll put it on here. Cool. And now I'm just going to basically fill this in. So what it is my session review. I actually do it a bit sooner, and usually I'm quite strict on time, but I jumped on this call. So I took one trade today so far. Might change, but for now it's one. And then these are the questions that I usually fill in, so I don't mind doing it on live anyway. It's something that sometimes can be a bit personal, but you know what? Like, I'm not somebody who's going to be all funny about something like that. You might find value in it. And someone messaged me as well yesterday. He asked for this document, but I told him it wasn't this document, it was another document. But I said sometimes you can create something like this for yourself, where you can ask the right questions and then you can improve in your own way. I don't have GJ on watch. No, I chose not to put it on watch just because I had a lot of yen pairs. And at the end of the day, GJ, out of all the yen pairs, I have the lowest strike rate on GJ, weirdly enough. So I just decided, sorry, GJ is not going to come on watch. Emotional state before. Emotional state was very good tips. So I'm just filling in my document. Obviously, you can imagine I don't really have much to say when I'm filling it in. I was feeling very sharp, happy with the session originally. So, looking at trades, particular, then afternoon forecast did pairs began. I think this was a good one as well actually because I forecasted my on my watch list. I have pairs that I forecast for the morning and the afternoon, so ones that are likely to shape up for the afternoon. And something that came up was I had Aussie 200 on my afternoon watch. So I really did my technical analysis. I really chose that pair and I was really happy with it. But then when I went to take my dogs for a walk, because if I have nothing on watch or nothing's shaped up towards my forecast, I usually take my dogs an hour earlier than the set time that I put. So then I took the dogs, went for a walk. I was kind of happy with everything. I came back and then I had a quick scan on the markets after I finished bits and bobs in the house. And then I noticed that my afternoon watch was Aussie 200 actually shaped up for me, the two touch. And I was looking at it a little bit more carefully and I was like, okay, all things considered, I wasn't anticipating it to come back to that region so fast. I thought it was going to be a bit corrective and stuff. So then when we had the retrace candle, it was about 5 minutes after analyzing it. And yeah, and I was happy to take it. So again, sometimes it does definitely help not only forecasting for the morning, but also forecasting for your afternoon or your evening, depending on what time zone you're in. How did emotions impact your decision makings? There was very little emotions. I was very detached from the outcome and more focused on the process. What can I do in that session to ensure that I mapped management did I follow my trading plan? Yes. Were there any trades that I did? No. See, it helps actually when you do the correct things. After a while, you realize that if I didn't follow my training plan, I would have to write a whole bunch more. Then I would have to explain why. And then I would have to go do more things about it. So it's a lot easier for me to just follow my plan and not deviate. Do you know what I mean? Like, I don't like having to do so much more work when it's unnecessary. And if I deviated, I would have to do a lot more unnecessary work. But there's times in your journey where it comes to that. So, you're probably nodding your head thinking that's so true. The amount of extra work I give myself because I just don't follow my plan, it's ridiculous to the point where I don't even want to do anything anymore. Whereas if you start doing things correctly, this stuff becomes easy and you can fly through it very quickly. Did I manage the risk properly? Yes. Stuck with 0.25% risk. Was my execution timing aligned? Yes. Oh, wait, no. 8 a.m. UK, I believe it was. 9 a.m. Yes. I'm gonna double check my entry time, but I'm pretty sure I did. I got it on the session open 15-minute candle. Let me just double check that. 15-minute. 8 a.m. Okay, yeah, 15 minutes into London session, so I was very happy with that. No worries, yep. So, yes, 15 minutes. London session. Was there already? Yes, there was moderate. which is one of those ones. You know, I woke up this morning, and same as you guys, you know, a lot of our watch list just moved, moved quite aggressively, and it's one of those ones where the first thing I said to myself was, I don't need to worry about this. That's completely fine. This happens. You know, this is part of trading. I'm happy to just let it be. It is what it is. I'll catch another trade another day. Those sort of things. Those are the words that I say to myself because I'm trying to keep myself abundant rather than feeling some level of FOMO that, oh man, I missed something. Let me try and get momentum run. Decent things. I will look at those options, but those are not the things that I'm after. I'm looking after a very sustainable, high probability, good positioning, um, good quality entry. It's early in the run, so that kind of comes into your sequencing as well. And then, yeah, just all of these little factors that make a big difference where when price is pushed away, it's a complete different trade, right? And I've said it a few times with my watch list. I said, I'm no longer interested in this particular one right now because it's now in a complete different area. It's a complete different trade to what I forecast, even though it might give me the same structure I forecast because it's somewhere in a complete different region and it's got less room to move, or it's, you know, it's positioned halfway through its structure, it's got more room to develop. All these little things change so much when it comes to having watch list pairs. Anyway, let me just finish this big takeaway from one session. Mindset over outcome. Keeping a strong thought process and not letting my environment dictate my decisions, right? And that's basically what I was just saying. I didn't let the volatility of the market dictate my decisions. I didn't let the market persuade me that I should be going long right now out of FOMO or something like that. And I think that's a very good thing to reflect on, even if you don't experience FOMO much. It's good to give yourself like a pat on the back, or, you know, write very positive things about yourself, because these are things that you've overcome at some point in your journey and you shouldn't neglect them. You should reflect on them as well as much as possible so you don't forget and you remember how difficult it was. The same way that in the UK, what happens is on the 11th of November every year, they have a Memorial Day for soldiers in the UK who basically fought for the freedom of the people in the UK. So everybody celebrates that on the 11th, mostly people who are born in England. And it's kind of just one of those things where, you know, it's, I mean, I'm kind of losing the point here, but it's kind of one of those things where you need to kind of celebrate yourself as well, because there was a point in your journey where you went through a lot of these struggles, or even if you're going through them now, there'll be a time where you don't want to forget about that. So like they celebrate on the 11th, but you can celebrate it, you know, as much as possible whenever you can, to celebrate that you've overcome some different hurdles in your journey. Like there was a time where I would have taken that risk entry, but now I know not to take those. And it's those sort of things. What will I adjust the focus? Continue to persist my routines and tick off daily goals and prepare. And just grab a screenshot of my trade. So here. Rate my session a good solid 8.5. 8.5 because I woke up extra early. And last week, no, not last week, the week before that, I was slacking. I was definitely slacking with waking up earlier, but I still woke up early, just not as early as I wanted to. So that was great. So yeah, Aussie 200 right here. Good. And then we can swap this back now. So if I come down to video capture, Give me a second. Oh. There we go. Cool. And yeah, so we're basically still in the neck of the woods right now where we're waiting for this to move. I'm happy with this trade. I like it. I'm looking at this candle here though. I'm not a big fan of it. So depending on how this 15-minute closes, I might get repositioned on a 3-touch or a short if it does some reason push away. GU is developing, it's coming into that entry point now, which I like a lot. So I'm going to be waiting closely for that. It might come in for New York session. It may come in a bit sooner. I've got NJ. Yeah, I still watch anime actually. G, GA, Aussie CAD. Ooh, no, I'm not a fan of that Aussie CAD. But potentially creating a base there could be an interesting one. I just don't think that's the gameplay. GU though, that looks like the one for me to put attention on, and I'll put that into my afternoon forecast. I'm going to leave Aussie 200 actually, leave risk open on it. I'm quite happy with that. Let me see S&P 500, how that's developing. That might change things. Coming back in to retest that area. Yeah, it's possible. This could be coming back down, wash everyone out, New York session, push back up. So for those who thought that they might have missed a trade on this, there's a high possibility that you maybe didn't. And price is coming back down, it's going to wash people out. So that's something in itself. I'm not really a big fan of this right now anymore now. I'm trying to think about, do I want to get out of this or stay in it? I'm gonna move to break even and leave it. I think if price is coming back down, there's a high possibility it's coming back down to tag people out where I entered. So yeah, it's a trickier one. I don't see much reason for it to completely wash out here. Just looking at it, let me just measure this ray line on here. Yeah, it's kind of on that point now where, you know, if you were to get some sort of sharp pullback for whatever stupid reason, it could do 50% into that region. And then it continues higher. So, I'm not a huge fan right now of staying in this, but I don't consider it being the worst trade in the world. I'm not sure if I want to leave risk open, so I'm gonna definitely just change that. 1 second. Let me have a little look on my platform. Do you have USD CAD on watch? I do not have USD CAD on what I do. Yeah, it's right here. Additional pairs. Do I have USD CAD on watch? Yes, right. USD CAD. That's what I'm waiting for on USD CAD. I think, you know what I'm going to do next year? I'm going to start giving away money to you guys because you guys have been loyal. So I'm going to, when I pass this assessment that I'm doing now, I'm just going to start giving you guys, do you know what? I'm gonna start doing giveaways. That'll be a fun thing. Always wanted to do giveaways. I'm gonna fly over to you guys in Nigeria, and I'm gonna get you guys. We're gonna go out and eat some nice meals, live that nice life. No, I'm saying that I shouldn't be saying these things. I don't know if I'll do it, but definitely, I'd love to do things like that, man. I'd love to just kind of fly around to you guys and see and do things. It'd be amazing. I'm just thinking about what things could we do? What could we buy? What let's see. And there's a lot of Nigerians here. That's why I'm thinking Nigerian. Obviously, I've been to West Africa. I've been to Gambia. But most of my followers are from mainland Africa, so I might as well we might as well go and meet up there. Just looking at it. Ooh, 13. I need to share this screen. Let me share. Oh wait, one second. Let me move this to break even. I don't know if I want to move to break even. That's the worst part. The trade is looking good. Trade's looking good. I mean, it's just that ray line there, which again, that trend line is forming as something for people. I'm not too bothered about that. It's tapped into this. This is nothing significant as well. 15-minute. I'm mitigated ever so slightly, but not from craziness happening in the market. We had the small consolidation there. We've come back up. We've tapped into it now. That's where the seeking the volume. There's a sharp sell-off there, which, again, if I measure this range, this overall range here from this point to this point, we're situated borderline 50%. If I take the 4 hour, I look at the 4 hour, yeah, I mean, like, we're sitting on that 50% region, man. This can still, it's still technically borderline bearish right now. So I'm positioned within that range. Overall, though, of this range, we're still bearish. There's still some run to be made. So with that in mind, looking at an hour, it's a trickier one, man. We even squeezed into this. Let's have a look here. I don't want to overthink it, but as an isolated structure in itself, that wasn't really much, and now we are here, ideally from top to bottom of this range. It doesn't make sense for me to leave this trade running, to be fair. Like, I'm not saying that price won't continue higher, it probably will, but the odds are it could probably tag me out before it continues moving higher, because just looking at price action, I don't need this anymore. I can remove that off. But this little candle here, oh man, do you know what? I just feel like, what if I don't think I even have much risk on the table, but it's a new week. I'm trying to build up from here. 4 hour closes in 2.5 hours, so 4 hour could be all the way down here. Do you know what I mean? That's what I don't like because of how that closed there. This 4 hour could be all the way down here. So if the 4 hour comes down here, I'm taken out anyway. And that's the pain of where I'm situated right now. So that's why I'm kind of not. The daily still looks okay. The weekly still looks, it's okay. The monthly, I'm happy with that. The hourly, and then it's about the 5 minute. I'm gonna, let's see, NJ. Let me look at something else for a sec. NJ, oh, NJ's done, man. NJ's done for the short, it's not there. The short's not there anymore. We're looking at longs. So I think, yeah, we wait. It's the best point. We wait. We wait for whatever. Right now, the bottom's not being confirmed. It could be here. It could be further down. It sells off. It comes back up. We just wait to see if this is the trade. Right. If you get that, solid. That's weight built. Could go into maybe Tuesday, or no, that could be even this evening. That could be Asian session. I have a strong feeling Asian session, a lot of these trades might go. I don't know about you guys, but these yen pairs look like they could be gearing up for an Asian session long, because looking at how it moved today, I think it's an accumulation right now. I think London session, it kind of pushed higher, but then it began accumulating. So Asian session, this is all Asian. Pre-London, it was still moving forward. Now we're in accumulation. We'll go into New York. We'll still be moving sidewards. And then we'll go into Asian. And then at some point, Asian session will move long. So I genuinely believe I'm not going to touch the yen pairs today. I'm going to wait because a lot of people will see this momentum, but it's already moved considerably. A lot of people who were looking at shorts, they didn't take the shorts, or they got taken out here. Now prices all the way up there. More people are trying to get long, but not a lot of people have the patience to wait in a consolidating market. And I think for that reason there, those that are patient and wait now will probably get rewarded. So just be patient with that. You can take that easily into the next point here. Let's say, you know, you can manage it in there. You can get a trade position quite well if the structure's there as well. You go in here, 10 pips. I don't see anything wrong with 11, 12 pips. To this point here, you're managing about 3.5 to 1, right? 3.5 to 1 to that point there. Most likely we're going to move higher, but nothing's confirmed. We could tap into this. We could even retest the next point just above. And then, you know, you end up coming for like a 5% there, and then it drops. If I was holding this trade, I would get out for the 3 to 1 here. Just before, actually, I wouldn't even hold it for the 3.6. I would take it out just there on the 3% right there. And I'll take it as a 3 to 1 because I would stack that. This is something that I've been saying a lot of the time is, you know, let's say you're trying to get 10% and you need 10% to pass your exacting, okay? So in theory, you could do 10 1% trades, right? Borderline, if you lose 10, and then on the other side, this is basically how many winners you need, and then this is how many losers till you lose your account. You could lose 5 on a day, right? On one day, or if you lose 10, which is your 10%, I'm just going to go with 10% drawdown. You've lost your account, okay? The goal is obviously 10% here. That's what you need to achieve. Just draw that around. And then if you do it here, you can do 20, right, at 0.5, right? And then you need 20 as well here. And this is why the maths gets interesting. And then here you could do, I think it's, what would it be? 40. Yeah, it would be 40 at 0.25 or 28. I think it's 28, but anyway, 40, right? 40, no, it's 40, what am I talking about? 40 consecutive trades. Now, remember, this has to be consecutive, so it'd have to be loss after loss after loss after loss, or just over a longer period of time. So go through your data, see what's your longest losing streak and see which category works best for you. Then, once you have that data, look at your average winner. I said this in the last video. Let's say your average winner is a 3 to 1, okay? So your average winner is a 3 to 1. At that point there, once you've established that, you can then be like, okay, well, if my average losing streak, so this is your losing streak that we just spoke about, let's say on the maximum over the 3-month period, you lost 8 trades in a row, okay? So it's minus 8%, right? And then your average winner, right? Your average winner is a 3 to 1. Okay. And that's also at 1% risk, right? Doesn't really matter what risk it is, but let's just say it's at. So your average winner is 3.1. Now let's take this data and translate it into what we have here, okay? So now, if I take that piece of data there and we look at it to the side, I'll just quickly take this tool here. What you have over here is very interesting because you can lose 8 trades in a row, means you can be at -8%, but you can take one winner, and one winner would put you up 3%. So let's say you've started your trading and you've taken -8, right? Which means that you took a loss, another loss. Actually, I'll just do it this way. Okay, you took 8 losses. That's 8 losses. But then you took one winner. All right. So at this point here, you've got -8%. Bear in mind your max drawdown is 10%, right? At this point here, you've got +3 because your average winner is a 3-1, which -8 is ridiculous. It's hard, man. It can happen. So at that point there, if you do the maths, you're basically at 5, right? So now you're at -5 total, right? But then let's just say for sequence-wise, you've taken another win. Right, we're not going to put break-evens in here, but let's say break-evens are in there somewhere, but we'll just use the stats as wins and losses for now. And you've taken 2 wins, and then let's say you took 3 losses. And then you took another 2 wins, right? Now we'll just use them stats. So at this point here, you've taken 8 losses, and then you've taken 2 wins, 4 wins, and 3 losses. So 3, 6, 9, 12 -3 puts you at 9. Okay, so you've got +9% in this period, and then in total -3. We put +9 in this period here. You've then got a total of +1%. Right, and you've taken a total of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trades, right? So kind of see it in one way, right? You've taken 15 trades and you've ended up with +1% due to the worst sequence you could have been in that period. Now, even so, at any of these periods, you would have survived. But if you were in -8 and you had only 2% drawdown, your mindset would be completely battered. Would you be holding for a 3-1 a lot of the time? Probably not. You'd be taken out a bit early, this and that. You'd probably mismanage it, and you'd have to be a bit more on the cautious side of trading. So this +8 might be a lot less. It might be +6, and you might be causing a mismanagement because of where your mindset is. If you traded with 0.5% and you lost 8 trades, you've technically still got 12 more trades on the table at that point, right? So this +8 might be a lot less. It might be situationally, and you might be it's good. Situationally, yeah, situationally, it's really good. You're still in a position where you can really manage this well. So I wouldn't be concerned in that way, but now this is the way I see it, is 40%, right? It's good. Now, let's just say we remove that, we're at +1, right? Let's just say we take the same sort of stats there and we add it in again, right? In that way, but now this is the way I see it, is 40%, right? Now, let's just say. So then at this point here, we've established we're at +1, and then 3, 6, 9, 12, 15. 15 -3 puts us at 12. 12 plus 12. So then at this point here, we've established we're at +1. And then 3. So at that point there, we were at +1. Now we're at +13. +13. In the sense of risking with 1%, sure, yeah, you would have passed it. That's what it shows. but at what cost? You probably would have found it very difficult to recover from that much loss. Over here, when you now look at it, you only need 20%. You're at 13% so far. You're at 13%. So remember, some of these trades will be more than a 3-to-1, most likely. Some of these trades will be a 5-to-1, 6-to-1. So this number will be much greater in this sequence. But we've taken the worst sequence possible and we've put it into the equation of all of this, which is what I want you to understand. Now, if you took worst case scenario, because these things happen, let's say you took another sequence of really bad trades, right? That's -8 again. So we know all of this adds up to +13. If you do -8, right, that will put you at, I believe, +5. It puts you at, probably my maths might not be mathing, but we're going to go with +5 because maths was never really my best suite and I am dyslexic. So whatever's going on in my head might be completely wrong. But let's just say you're at +5, right? So now at this point here, there's a slight echo, I think. Your video is playing in the background. I appreciate that. I will. Is it still echoing? Ah, maybe. Maybe that's better. Let me know. Let me know if it gets any better or if it still remains as bad as it is. So at that point there, you're +5. Now let's say you take a sequence of winners, right? A good sequence of winners where you took, 2 wins, a loss, 2 more wins, 2 more wins, a loss, right? And you throw that in the equation. We know that we're at +5 at that point, right? So then we do 3, 6, 9, 12, 15, 18, right? 18 minus 3, we're roughly looking at 13. No, sorry, 15. So 15 now plus 15, you're at 20%. Right. So then we do 3, 6, 9, 12, 15, 18, right? 18 minus 3. There's a video playing in the background. No, sorry, 15. That's weird because I think you are, not necessarily an echo, but the video is playing in the background. But not too loud, we can hear you. Interesting. It could be my wife in the other room. She's just probably listening to music, so I do apologize about that if it's very loud. But yeah, let's look at this for a second. Now you've got that whole section of data. Now let's say these were weeks, right? Week 1, week 2, week 3, week 4. And then, we set it here. So then that would put you at plus 15, right? Right, so you've had bad weeks and you've had good weeks, right? Let's put you at 20% now. At 0.5%, you've basically passed. You've passed, and the worst place you were ever was at -8, not even halfway through the account. On the first one, you were borderline lost. Mindset-wise, you're completely shattered probably. Like, oh my gosh, I'm about to lose my account. And for a lot of people, it's expensive, For some people, you have to realize this stats are going to come from your data anyway. So the next one you're looking at over here, 0.5. Applying 0.5 to all of this, you would have passed your 10% at this point. After that, so 1, 2, 3, 4, 5. 5 weeks. After 5 weeks of this being your sequence of winners and losers with an average of 3-to-1 is what we took. That's basically the outcome. In terms of the next one, which is the 0.25, sure, it could take a little bit longer, but you've done it a lot safer, and you may be more inclined to hold some of these a little bit longer as well. But just using the base data of what I've just shown you, you can see that it's not necessary for you to trade with 1%. In fact, I would argue that this is probably the worst one because of how close you get to losing your capital, right? These are very difficult scenarios to be in. So when you then look at it like here, in total, this one was a lot safer because I always had a 12% buffer. Okay, despite my worst periods of trading, I had a 12% buffer. In the best scenario here, I always had like a 20% buffer on my account in terms of 20 trades, 20 more trades, always. So it left me in a place where I could get away with a lot more, and I had room to go through these bad streaks, but it didn't affect me as bad because I was trading with low risk. So now let's just look at that, right? 4 of those trades accumulate to 1%. If 4 of these accumulate to 1%, that's 1%, that's 2%, right? The biggest drawdown I had on my account was 2% at any time, right? Then suddenly, if you look at it, one and a little, okay, 2 of these trades, because it's 3 and 3, that's 6, right? Borderline, it's 1.2% on that, right? So, so it's not so bad, right? One of these are basically takes up 3 losses. So if we start cancelling them out, if I cancel this one out, takes out this one. If I take this one out, takes out these 3. This one takes out those 3. This one takes out those 3 losses. This one takes out those 2, and this one. This one takes out those 3. This one here takes out those 3. This one here takes out these 3. And then this one here has taken out this one, and 2 more losses that might come in the future. Technically, this is where I'm at. 1, 2, 3, 4, 5. 5 winners, solid winners, and an extra 2 trades in there as well. So, you know, putting that together, 3, 6, 9, 12, 15, and then puts me borderline 20. You know, that's basically where it's at. You know, a lot of these trades are covering you for other trades, and then you're at the sequence here now where you're 3, 6, 9, 12, oh, sorry, 3, 6, 9, 12, 15, 20 trades ahead in a sense of sequence. So then you can see your sequence like this, and you're like, okay, hang on a second, that makes sense. I could take another sequence of 8 losers now, not because based on I've got 20%, because that's what it is, but based on my sequence of winners and losers, the odds are if I take another couple trades, the longest losing streak I'm most likely going to go on, due to just following my strategy 100%, is going to be 8. So after 8, that's when the winners start coming in. So the probability of me getting a winner now is a lot higher after this losing streak. So that's what kind of keeps me going as well when I'm trading with low risk, because I understand my probabilities really well, and then I understand how I can utilize this to make me more money. Let's quickly have a look at this this trade here. It's a lot higher after this losing streak. So that's what kind of keeps me going as well when I'm trading with low risk, because I understand. Okay, so it's looking okay. It's looking okay. We still got about 20 minutes till the close of the 1 hour, but we're good. But it's not too loud. We can hear you. Yeah, look, I apologize. I'm still working on getting my sound on point. I've got a Shure, what's it called? Let me see if I can show you. Yeah, look, I apologize. I'm still working on getting. Give me a second. Sound on point. Oh, okay. So now you can see. Oh, so this is Nigerian food. I was thinking that this when I was talking about Nigeria, this is the food that we're gonna go and eat together. So traditional food. But yeah, I've got this microphone. I'm just gonna bring it short. Got one of these. I've got one of these. In fact, I bought it for my wife. This one specifically. I bought it for my wife, but she doesn't use it. So I want to get one of these things that come hang down. Not from Team, maybe from Temu. I'm a big Temu fan. If you know me, I don't mind supporting China. China delivers the goods, literally. So I'm thinking of getting one of these and getting them put on my desk as well. I think that would be a pretty useful tool. It's just sometimes I do rock my table a bit, so I might attach it to something else. But yeah, I'm kind of for one of these. Not the microphone. I've got the microphone. I just need the stand. This one comes with both, but let's see. I like an RGB one though. RGB mic with stand. I should have put. Why is it asking me for all these verifications? Is it just going to keep asking me? Really? It says, so please click on the large gray cube. I think I missed it. Yeah, let me do with what is this called? It's called a sturdy brum stand. Okay. Oh yeah, you wouldn't have seen the whole screen there. Are you guys looking at what do you guys have as mics? I mean, very interested to know. Risk manager, there's a slight echo. Oh, you read this. It was like 5-second voice delay. Yeah, sorry about that. Yeah, one of these mics, probably not so basic. I do like them with a bit of a light. It looks kind of cool. You know, if you've seen my computer, you know I like a bit of lighting. I mean, who doesn't, to be fair? I think everybody's essential dream setup has some sort of RGB lighting involved. So I'm looking for one of these, to be fair. I don't mind. I mean, to be fair, I have a nice mic now. I just need to get it set up. And then hopefully I don't have these echoing issues and things. I actually had a really decent headset before, but it broke, so it is what it is. I've got a Yeti one. This mic is supposed to be really good. It's supposed to be a podcasting mic, but Joe Rogan even uses the same one. Well, he used to before he got the Shure one, so yeah. Some of them are decent. Yeah, yeah. I mean, I don't get me wrong. They all have like a mute button on it, but his one it seems pretty decent. I mean, I don't know why I would want to mute it during a webinar or whatever, but yeah, for sure. Anyway, go for something pretty decent. RGB mic. I think team is definitely probably not giving me the sort of things I want. RGB. Anyway, let's go back to looking at the food we were looking at. So transport yourself. These look good, man. Look, now I've got one friend called Ike who lives in Gambia, so it's nice. Jollof rice. I like to see the pictures. Here we are. I mean, to be fair, a lot of tribes in Africa have very similar food, like the jollof rice over West Africa. It's very, actually, no, I couldn't say it's the same. It's very different, to be fair. It's the consistency of the rice as well, I noticed, but damn, jollof rice is good. Fufu. Do you know what? I like fufu, but whenever I watch these Nigerians eating it, it's like so hot. It's like fire hot, and they're eating it with the food, which is blazing hot, like literally just come out. I'm thinking, like, you know, mouth is on fire. So it's one of them ones. I don't think I'll be eating it when it's so hot like that. Ever. I've had this ebe. Ebe is nice. If you guys have had the seafood, it's just like a mix of loads of different things. Probably made differently everywhere, but ebe is really good. This is how we manifest. This is how we all end up in Nigeria. When we go out, we have a good time. I mean, to me, a good time going out is eating nice food. So, suya. This actually looks pretty decent. What is this? Savory protein dish. Seasoned beef or chicken. Oh, that looks pretty nice, to be honest. You know, knowing me, I'm talking about food. I'll probably order 5 of them. Doesn't look like it's enough, man. I'll order 5 of them. I just skip something. Pounded yam. Yeah, of course. Oh, look at this. Fried plantains look good. The fish looks good. Fish is hit and miss though, but I'm a big fish fan. I live by the sea here, so I get a lot of it. Super. This looks interesting. That's nice. You know, I also like Indian food as well. Like, I like it spicy, so we'll see what we can find. I've had this many times. It's like pancake. That's what they call it in where I've been in Gambia. They call it pancake. But it's nice. This is really nice. Pepper soup. Oh, this sounds nice. Look at that. Man, why is there no more? Why isn't there any Nigerian restaurants I haven't seen many Nigerian restaurants that serve food like this. To me, this will sell, man. This and a bit of something else, like bread or something. Probably European people with the bread. It's even got the Scotch bonnet pepper. Oh man, this probably tastes incredible. Oh, damn. I wonder if for the Nigerians who are here, which one would you say is the best dish? Okra soup. I'm not a big fan. I'm gonna skip on okra. Puff puff. Oof. That's the dessert time. I'm pretty sure. Oh man, my friend used to make this. My friend's mum. I remember I used to go into her kitchen and steal them out of the pot. When I was a little kid, I once I had it and I loved it so much. Say to my friend, I need to go to the bathroom, and I'll go into the kitchen. I'll take one of these. How crazy is that? Oh my god, I liked it that much. I was stealing food. Um, Chin chin. Oh my god, yeah, I've had this too. Interesting. Uh, nice little snacks. But yeah, damn, puff puff. These things are really tasty, man. Wow, wow. Anyway, I want to see. Oh, actually, talking of that, let me just go to Google. So this is where I am. I'm situated in here. Indian sweets. I can't do Indian sweets, man. Do you know what? I don't have a. I'm not a sweet tooth type of guy. I'm a salty guy. I like salty food. I like. I'm a big. To be fair, I can go without meat, but I do crave it. I do like meat, like grilled meat and stuff. But sweets, it's hit and miss, man. Really, sweets sometimes can be too savory. So I'm not a sweet tooth type of person. But I do wanna go places, man. Maybe I'll get like a travel vlog at some point, and I'll come by places. Obviously, Europe is pretty boring in the sense of when you've kind of been in Europe long enough. But I can suppose like when you live in Africa, you're thinking, man, Europe though, that seems like where the life is at, or America and this and that. But truthfully, man, the good life in Africa, man, just not many. You don't have the capitalistic sort of things, but you have everything you need, man. Good food, um, good people around you as well. It's just the economy is not always the best, and the government's everywhere really bad. But let's see, Egypt. I do want to check out Egypt as well. Um, but food wise, probably this whole region here, man. Definitely, I want to be checking out the food from these regions. They look so good. Nepal, Thailand, Cambodia, Vietnam, China. China's a whole different world in itself, man. It's so developed. Like to get around China, man, it'll take a lifetime. Shanghai, man. This looks cool though. I've always been into my sort of Japanese, Chinese movies, so this stuff looks insane. South Africa, but it can be a bit. Yeah, I mean, look, my family's from. Well, my dad's from a place not too far from South. So my mum was born here. My mum was born in Nairobi, Kenya, over here, and then my dad is from a small island down here called Mauritius, over here. So it's not too far from South Africa. If I go there, I'll probably just pop down here and say hi to some family. But South Africa for sure. I mean, I've got friends from Zimbabwe. I mean, Zimbabwe is a nice place. Malawi as well. Um, and this region as well. Tanzania, Kenya, Uganda sort of region. I've got a few friends from trading wise there. A good majority of friends now in Ghana and Nigeria. And then most of them are from Botswana, South Africa, which to me, I mean, this is all for me like these people are genuinely so much alike. The Botswana and South African people, like they're like the brotherhood in my eyes when I speak to them. They don't seem too different. Or the region here, and Namibia. I don't think I've met anyone from Namibia or spoken to anyone. Maybe bordering, but yeah, I don't know if there's beef between Botswana and South Africa, but same land. Johannesburg. I had a friend from there. He was telling me it's so dangerous as well. Everyone carrying guns around and stuff. Mad. I'm sure most of South Africa is a difficult place to get around with racism and all sorts. But overall, it's nice. Not far from Brazil. Yeah. Yeah, man. Top G's like, stop scaring him away, man. He was gonna come here and buy us things. No, no, but for real, yeah, nice, nice. Let's see. I want to check my trade, see how it's doing. Oh, nice. Okay, so we are running now. Okay, so where are we? We are at 1.4% on route. This is, I believe, this is halfway through to where I'm looking to take profit. Like I said with the stats I showed you just now, I showed you that because that's what I'm doing. 3% is where I'm getting out, really and truly. It's where I want to be getting out. I'm riding this for all the trades I'm going to be taking. I'm stacking it 3 to 1s. Some might be a bit more, some might be a tiny bit less, but the majority of them will be 3 to 1s. I'm looking to play. I need approximately 9.5 trades of 3 to 1 to get 10% on 0.25% risk. Beautiful, absolutely beautiful. You can't see my screen, right? Let me just swap over because I was sharing Chrome, wasn't I? Yeah, here. What is going on? Why can't you see it? You can see Google, but then you can't see. Now you can see it, right? Okay, yeah. So we're running pretty decent on this. Like I was saying before, this is basically what I'm looking at. I'm looking at stacking these for like 3 to 1s, ideally, because that's my average win toward. I want to certify that into my data as well. I want to make sure because the last time I checked it, it was, I know it's a bit different, but it was 2.8%. My average across all my trades over the 3 month period of live trading was 2.8%, which is borderline 3%. But if I can push that a little bit further, then that will be a little bit better for me data wise because that will be like a solid 3%. And then I can say that my average, 9 trades is 10%. So if I'm taking 9 trades in a week, the average I'm looking at is around about 10% a week. If we're looking at a 5 week month, it's 50%. If we're looking at 4 weeks, 40%, so forth. Obviously, borderline. Some weeks will be more, some weeks will be less. I'm not always going to have 9 trades in a week, but statistical data is not going to lie to me. It's going to. I haven't stayed there for a few years, but when I visit, I'm told it changed security wise compared. Yeah, I think as well. A lot of these places are getting a lot safer because a lot of them want to attract more investment. So, like right now, Georgia is becoming a very um, good place to move because of its tax laws and stuff. So, yeah, it's just things like that. I think if people want their economies to grow and they want a lot of rich people to come, they're changing a lot. But the nice thing I like is the African movement right now in Africa. They're taking control, but hopefully the corruption isn't going to follow. But it seems like there's a lot of self-control coming in from a lot of different countries, and they're starting to realize that we don't need to depend on other countries like Europe and America and things. We can be self-sufficient. We have enough knowledge. We have enough manpower. All these things, and I think that realization is now becoming more well known across the majority. So the majority of people are now on the side of we have access to enough resources and enough knowledge for us to now develop something that we can take full control of. What are you anticipating on EA? I don't have EA. Oh, yeah, I do. Yeah, it's a long shot now, but boom. Maybe, maybe even here could be slightly different. Could be like this. You know, right now it's one of those ones where as it keeps selling down, I just need to keep adjusting. But ideally, just to keep it so simple, I've got it marked on like this. It's going to be either looking at price cap, how it comes back into this area or this area, depending on how it reaches that. That's how I can take advantage of it for a risk entry. But if it comes in a bit sharp and it's like this, and then it sells, then I would probably be waiting for that, so I can risk entry that. Like I said last week, I don't know if you watched all the videos, but last week I was talking about how I actually, despite that there's risk entries and reduced risk entries, the majority of the time a reduced risk entry is something that is like a kind of a last resort for me. And usually my strike rate is quite bad on reduced risk entries. Not meaning that I want to get a lot better on them, but if I have a really good strike rate with risk entries, I'll just wait for those risk entry criteria because I prefer them over the reduced. And yeah, so waiting to see how that develops. I'll look for those risk entries. If I don't get the risk entry there, and let's say, for example, it does this, it doesn't give me the entry I want and it sells, I'll wait for the insurance entry and then I'll look for the entry within that there. And then I'll still get the risk entry just on the insurance entry. And that's basically how I'm looking to play that. GA, yeah, GA is nice, man. I don't know. I really, really do like. I really, really do like this. Personally, just gonna have to really be patient with it. Aussie session, I think it is. I'm thinking maybe after New York midday, it trickles, it goes sideways after swaps. It would have to be definitely after swaps because the spreads during swaps, it gets so crazy that it's a waste of my time to try get positioned in here now. Even any time of day now, even if it's shaped up right now, I would take it. I'd wait for after swaps, Asian session, prime time, sell that. That's if I really wanted to, but I'm happy to wait. Sorry, I've got so many things going on in my head, it's hard to articulate. I'm more than happy for me to preserve my mentality of getting good sleep, going to sleep on time, doing a good set routine, these sort of things, and then be sharp for London, New York, then having to stay up late for Asian to potentially catch a trade on a pair that I don't really like much. Unfortunately, it's GA. You know, and it's kind of one of those ones. Like if it's shaped up London session, great, cool. I can take that. And if it doesn't drop by late New York, then I'm out of the trade or whatever it is. If you know, these are the situations. Like I have set criteria just because the spreads on GA can be so bad. I don't want to be stuck in that sort of trade at all. How many months does it take you to pass a challenge when, oh man, I could do it in like, I've done it in 2 weeks before. I've done it in a month most of the time. Taking my time, maybe 2 months. So yeah, like 0.25%, man, there's nothing to really be worried about with it. I think it's an overthought thing. Hold on, let me see, where is that? I know it's here somewhere. G. Wheat, I believe it was on wheat. No, great, I lost it. Oh, here it is. So just go back to this data for a second. It's 40% now. So a lot of people, 40% is a bit crazy, you know, they're like, oh, man, how are you going to 40%? It's going to take forever. But in all truth and honesty, like, what are you trying to do? I'm trying to get funded safely. I'm trying to get funded in a way that's sustainable. And if I do make mistakes and let's say I go on an 8 loss losing streak, I can come back from it without having to feel the pressure of almost losing a funded assessment and then having to take out more money from my pocket and then feel uncomfortable about that. So what makes you feel more uncomfortable? Being in, okay, let's talk about 8% drawdown, right? Being 8% drawdown on 1% risk, being 8% drawdown on 0.5, which is 4%, right? I don't think I need to do the maps as much because it's there, but this is -8, this is -4, and then this is -2. Okay, that's 8 losses in a row.
What makes you feel the most uncomfortable? It's very obvious. The first one. Second one, less uncomfortable, right? It's manageable, but you're halfway through deep uncomfort. The third one, man, I can feel super uncomfortable. It's fine. But remember, your average winner isn't 0.25%. Your average winner is a 1 to 3. Your average is a 3 to 1. So I I take two winning trades. I'm already up in profit, right? I mean, okay, let's say I take three winners now on an average of 3 to 1 because I've taken 8 losses. So sequence wise, I should be making winners now, right? That's 369. That's nine. Oh, so eight. Oh yeah, I'm up 0.25% at that point, right? That's what I'm saying. So it's put me in a place where I'm at break even with three winners, where I've lost 8 trades and I'm still there, but minus 2%. In order for me to lose, I need to lose 40 trades. So when you do the maths, look at this, right? I need if I want to get 40% and I do 40%, you're not going to see the calculator, but I've got it in front of me because I'm not that math savvy. If I do 40 divide by 0.25, that's 16, right? Or 0.025 to get the zero. Yeah. Anyway, that's 16. So if I do 16 times 0.25, 16 times 0.25, that gives me borderline 40, right? That will give me the 40% I need, right? Because I'm timesing that by 3, I believe. Yeah, so yeah, just do the maths, play around with it, man. See if you're working with a 3 to 1, how many 3 to 1 trades do you need at 0.25% to reach your 10% target? It's borderline around about 11 trades, 12 trades, 13 trades in that region. So I believe it's 13 when I do the maths. If you do 13 winners at your 3 to 1, you're up. You've passed your 10% with 13 good trades. You should be good at trading if you're trading an assessment. So you should know your data off that. 1 second, let me just quickly check something. What's going on? And the thing is, I'll help as many of you as possible. You know, don't feel like, oh man, I've got to figure this out now, this and that. Like if you're stuck and you're really struggling, you can always just reach out to me on Instagram or whatever you use, and I'll be more than happy to kind of help you as much as I can help you. Like at the end of the day, you know, all these people in the chat, we're all on the same journey. All of us. Like how many people in this chat right now? Let me just double check. There is roughly around about 8 of us. 8 of us right now listening to this chat, right? And the majority of you show up every single day. So at the end of the day, you know, we should make like a small group of people here that keep each other's accountable and help each other's, because you guys are the ones who are coming here every single day, showing up and putting in the work. So accountability is going to be your best friend. So I genuinely believe, like in this chat, if you genuinely are willing to put yourself out there, just you know, drop your Instagram. Wait a second. What? Oh yeah, sorry. Yeah, drop your Instagram in here, and from that, everybody can just reach out to each other's, and then maybe make a small group. I'll be in it as well if you want. Make a small group chat, and then in terms of trades ideas and things like that, you can post them in there, and we can discuss it. And you know, if for example, Top G, as an example, if Top G learns something very important and he notices it, then for example, Tank or Sean might be like, oh yeah, shit, thanks for reminding me about the 50% on that, you know, and then that might be where you might be relying on someone else to give you that help. These sort of things make a big difference, trust me. A lot of us have different friends, have different groups on Instagram, Facebook, Discord, all these things, right? But at the end of the day, surround yourself with people that want to achieve the same thing and they're moving in the same direction. It's worth doing it on a small account like 5K. Yeah, man, any amount of money. Listen, I've been saying this to, I can't remember who right now because there's quite a lot of people, but basically, person passed a 10K funded assessment, right? So I said to the person, they want to get, and it's crazy, they want to get about, let's say about 200K.
right? That's what they want to make in a year, right? They want to make 200K in a year. Now, realistically, in order for them to get to that 200K, right now they're at 10K, right? And it's not even their money, they're trading prop firm 10K, right? So this person, I told them, stick with 0.25, which is $25, right? They want to get, and it's crazy, they want to get about, let's say about 200K. That's $25 and stack that. Keep trading and stack it. You make borderline, call it 10% on that, right? You've got $250. It's still not enough. And you've got your profit split. So they'll probably take like 20%. You do that twice, you make $500 over however long it takes, man. But you make $500, right? And when you get to that point there, you can then reinvest that, right? You don't need 500, it will be like 300 and something, but you can reinvest that now into the next level, which, let's just argue you're doing this sustainably, so you're doing 50K, right? Which costs you $300, right? So you've walked away with, let's say, $150 or whatever, and $300 in prop firms taking their split. You now have that, and then you do the same thing over again, 0.25, right? Which I believe is going to be, I can't even do the maths right now, but $250 or something like that, right? 250, something like this. Not 250, it'll be less, but anyway, whatever it is, and you'll times that by X amount, right? Times it by X amount, and then that will eventually go into paying for a 200K assessment, right? Which I believe is going to be. So then you've got the 200K assessment. You see how we're using this now? We're stacking it, right? We pass this one, but we do it slowly. We're taking our time with it. Why? Because we're protecting the capital we're working towards and having. Can you just quickly see what's happening here? Nope, it's not. Okay. Yeah. And then we're protecting it. We get to this point eventually. Maybe it takes a month, it takes 2 months, whatever, right? We get there. Then we're at the 50K now because we've basically done it with whatever we've made from our 10K. We take that, then we invest in the 50K. 50K, we do the same thing. It takes maybe a month, 2 months, however long it takes. Eventually, you get to the 200K. Now you're at the 200K. You're going to do the same thing again, right? 0.25%. But the beautiful thing about this is, wait, sorry about that. I hit the mic. 200,000 times 0.0. 200,000 times 0. Say 200,000 times 0.00. Yeah, about $500 per trade, right? Where you're now able, every time you win a small trade, you can afford to do another 50K or 100K assessment. So if you make, let's say, 5 winning trades, you can do 500K in assessments. Or you could do 2 more 200K assessments. And what have you risked? You've got 10% drawdown, which means you have 40 losing trades, but you only had to win 4 trades, which equals $2,000. And now you can do 2 more, because let's say they cost $1,000 each. You can do 2 times 200K on top of what you already have. Right? Remember what this guy wanted. This guy, you don't all have to do this, but remember, this guy wants to make 200K a year. Okay? But this is how he's doing it sustainably. He's not doing it by just jumping the gun and risking 1%, 3%, whatever to do it. He's doing it. So look, at this point here, he's got a 50K, he's got a 10K, he's got a 200K. Right? So in total, he's got 260K. Now he's gone and done the same thing again. Maybe even use the copy trader, right? But he's got 2 more accounts now, and it's all been paid from his original 10K account. It's just taken a few months to build everything up. He's now at that 200K period here, where what's the nice thing about this is that he's now looking at 660K, right? He's got 660K at this point. So let's say he's completed this. He's done all of this now. He's passed all his assessments. He's got money coming in, a little bit here and there. He's got some money put aside, but he's got 660K in assessments. Now, the beautiful thing about this is he doesn't need much more capital, because 660,000 times 0.025 is giving him roughly around about 16.5K. Right? Now he's got 40 of them. I think maths is correct there, or maybe it's 1.6K, 1.65K. Let's just say 1.65K because I think I'm getting a bit tired. So 1.65K risk per equals 0.025%, whatever it is. Yeah. So he's not trading a full percent; he's trading 0.25%, and that's 1.65K. If he wanted to go and stack up to more millions, he could, but he doesn't need any more now. He's got 660K, he's trading 0.65K per position, and he can take 40 of them, right? If he makes remotely 10%, right, he's got roughly around about 16.5K, right, at 10%, on 0.25%, bear that in mind, right? His average win is more than that. So that's all of his capital added up together, and then that's how much he's making. So now, if you do the maths, this guy has definitely got the skill at this point. He's got all this capital. He is now building up his capital. He wants to reach 200K. He can replicate this process and still keep making more money, but then at the same time, for every 10%, he's paying himself out this much. Now, he doesn't have to go 0.25 on all his accounts if he doesn't want to, because the beautiful thing about it is he didn't just go for one 600K account. He split it across. He's got 10K, 50K, 200K, 200K, 200K. He can say, with this 200K account, I'm going to go 0.5% risk. Now he can, right? Because he's got the ability. Or he can go 0.3. Or he can say, with these two accounts, I will. And then with those three, I'm going to stick with 0.2. So the accumulative of them two accounts comes to 1% risk, but it's spread it across two. If he had four of those accounts, 0.25 across four accounts, that splits over 500 risk on each. That's 2K per position anyway, but spread across four. So he has 40 accounts, but total risk is 2K, but he can take that 40 times. So you see how the maths is all working in his favor. So at the end of the day, the money can just flow in like crazy. It's just, you need to follow this process. Don't worry about the 660K that we're talking about. You'll get there. This is the main thing you want to be looking at over here, is sticking with, and I'm just saying it because I see it being the way, and I'm going to do it. I'm going to show you guys. I've just started to do assessment. I'm going to show you, I'm going to pass this one with 0.25. I'm going to release the stats and stuff. And then obviously you guys can get that belief in you as well, that you don't need to go heavy risk. So would this risk model require taking many trades and actually manage them? No, it doesn't change anything, right? If it changes something, then that means you have a bit of self-doubt in yourself making 1 to 3%, right? Look, I've taken one trade here. Every other trade I've taken, all of them in my plan, right? You just need to have a solid trading plan in place that, for example, taps into area of interest, gives you your criteria, and then you can manage it from A to B and take your 1 to 3 aggressively, right? Your 3 to 1, whatever it is, right? Your 3 to 1. I think that's the way it's looked at ratios. Your 3 to 1. And that's basically it. You can take those, and if you take 11 of those, you get your 10%. If you can do that and replicate that process as many times as possible, sometimes you'll get more. Sometimes the 3 to 1 will be here in the middle of the range. So you know this trade here has a potential for a 6 to 1. But this is where you're definitely looking to take profits. You can be loose with it when it gets there, but when it starts to follow through to 5 to 1, you've got 3 to 1 locked in. Because that's what you want to walk away with. You don't care, okay, 5 to 1, 6 to 1, that's great. Anything above that's great. But I need my 3 to 1. Because if I get 12 of those trades or 13 of those trades, right,
I go on to the next point of getting another 200k, or I go on to the route of the 10k. I go from my 10k to my 50k. I go from my 50k to my 200k, and then I go from 200 to 400, and then in no time I'm trading 2M. At that point there, money's not a problem for you anymore. Money's not the issue anymore, right? You are the asset because you've built the mindset. So don't think in terms of don't think too much in terms of like risk and stuff. Just think about when I'm getting positioned in my trades, can I manage it for a 3-to-1? For example, let's say you've got this trade here, that trade there, okay? And then I'll go to the 1 hour quickly and then find that because it does this thing. And then let's say, you know, price tapped in here, it gave you your entry there, you took it up here, you put your risk 25 pips, and then to the low you had 2.2, fair enough, and then it broke, it went down to 3% there, and you got out of the market aggressively. So that's the trade you're playing, right? There's a scaling opportunity in here, right, which is the insurance entry. Let's say you weren't comfortable with the risk entry because it wasn't a part of your plan, and you took this trade right here, you wick crops as well, 15 pips, you're going for a 3-to-1. This one dropped ultimately for about 4%, but even so, when it came to 3 and it broke, you got more aggressive and you walked away with your 3-to-1. So you see what I mean? There was 2 3-to-1 trades in there. I was able to take it on here, and that was a bit of a later entry. If I took it a bit sooner, could have got better protection as well. Probably could have even cropped that for a little bit more. This ultimately dropped off for around about 5%. So I know that, you know, I might have lost 2 trades just now. So I want to cover myself on that. I might just say, you know what, 4.4%, I'll take that. Right? Or I'll be super aggressive, but 3%, that's definitely what I'm walking away with. I'm not messing about with my 3-to-1s, and that's your conscious mindset saying those 3-to-1s, stacking those 3-to-1s, that's what's going to make me wealthy, right? GA looks good. Yeah, we mentioned this one a few times. I might be reading this message twice or 3 times, but yeah, I like it. Be careful though. We might not get it in the way we see it. We might actually reject here as well. So GA might come in here and do this and then sell off, and then you've kind of got this as your internal. I'm not favorable for this. I feel like if that happened, I'm happy to just leave it and let it be. I'm more so interested in it being for this. Something in the lines of that. I'm more favorable for this, then it's basically it's giving me that scenario. That's the scenario I'm looking for. If I don't get that scenario, I'm going to leave GA because I'm very hyper specific with what I want in some scenarios. Wheat, it's another one I really want to see play out this week. Really exciting. That one gets me hyped up. GU didn't come down. I thought GU would have been a New York session trade. What time is it? It's 12:19. I believe right now I am due for, no, I've got about 10 minutes, and then I'm going to jump into my meditation and then do my afternoon forecast at 1:30. So yeah, I mean, we're pretty much on time. Hang on a second. Got New York session 40 minutes. Yeah, no, I'm gonna jump off now. Actually, I'm gonna do my meditation and then just prepare my charts for New York session. Make sure that I'm fully ready for management and for any trades that I'm going to be looking to take. But right now, I don't think there's much on board that I'm going to be looking for. This could be a tight continuation to sell, you know. This might not actually even come back up. Seeing how this is shaping up now, you might get your trade here. So if you're hungry for a trade, this is actually not bad. It's showing that price is not committing in any way. There isn't really anything holding it back. It can commit higher for sure, but I think this could be your momentum run trade right here that you would want to take advantage of. So you basically see it like that. It comes up, washes out, sells off, and goes, and you can catch a trade in there. I'm not going to take that because, like I said, I've got some other stuff I'm looking at. EA, GA probably going to go together. A lot of the time it does, but you know, GA is moving sideways, so it does kind of also make me think that perhaps maybe I've overanalyzed this and we could be looking at that. So when EA shapes up, GA just goes up like this, comes up, taps into this, sells. You get insurance entry, and then you're off New York session, and you can take advantage of that with a short. If that happens, I would take that, but okay. I wouldn't take that, but it would be a part of my plan, and it would be still a high probability good setup to take that. And you can at least manage it into the lows that are for coincidentally a 3 to 1, and then that's you starting your journey on 0.25%. Um, yeah, EA looks nice though. That's how I would be looking to play EA now. I would want to see it wash out this area, not too far, but then, we basically washed out. This is your internal structure. That's your footprint. That's your retest. It washed out, came back in, retraced, and then I got in on the 5 minute over here. Stop loss, probably go with a little bit extra on this one. I'll go around about 12 pips. 13 to be extra safe, 15 to be loose. Like if you've got to go somewhere and you can't look at the charts, 15 pips. Take that trade there, 15 pips, and just walk away and let it do its thing. And then I'd probably be looking to be a bit more aggressive when it comes into that point there, because you're asking for price to pull back, possibly. So around about 2.5%, that could be sort of region where you want to get out. I would want to walk away with a 3 to 1, but I don't want to be too aggressive with my position. So 10 pips would probably be your 3 to 1. Again, you don't want to lower your risk because you're trying to get the risk reward you want. You want to be well protected. Yeah, GU is just not, it's not giving me what I want right now, so I'm leaving that. Aussie 200 is looking good. That's definitely going to be at break even as soon as I end this call. And NJ still developing, so nothing there for me just yet. I'm not going to mess about with that at all. I do think the fact of the matter is we tapped into this. Could we sell? I'm not interested in the sell there. That's not really showing me early signs of a good sell. Momentum coming up, but yeah, that's nothing, man. Forget that. Still looking at longs. Don't let it convince me different. USD CAD, same situation. Waiting for development. USD Swiss, I think as well, same situation. Waiting for development somewhere. Aussie CAD, nah. Aussie CAD, the reason why, even though it's there, you can see how it's forming. It's not showing signs of exhaustion. Yes, yeah. If it sells and gives me continuation there, oh my god, that's low risk and high probability. Everyone should be selling it if it gets there. Euro yen, likewise, probably still moving higher. Creating continuation, early days. CAD yen, same situation, early days. Hasn't even tapped into that. Continuation here to go long for sure. What else do we have? Aussie yen, yeah, Aussie yen for the long for sure. Aussie US dollar, very, very keen to wait for this at some point. And then Euro US dollar, yeah. So not much on watch. S&P 500 goes in line with the other pairs. Yeah, we'll just have to wait and see. But EA is the only one that I would say keep close attention to, because you might get it. You might get the trade here, or it might push a bit higher and sell there. So you're either getting it in here and it does the first scenario, or it pushes up aggressively, comes back in, then you get insurance entry into New York session, and then you sell the insurance entry. Reduce risk entry most likely, because it could just sell off without giving you the perfect structure. 10 pips would be more than enough as well on that. If you got reduced risk, 2 tops, 2 bottoms, just set it. That's the scenario where you take it, because you're playing the momentum and it's done everything it needs to. If you get the retrace remotely from there, or the first scenario where it was like this, you can play that. You can take it here, and you can even mitigate above it, which I would personally want to do. With spreads and stuff, you'd probably go 15. Risk reward to the bottom of the structures. I'll move to break even at this point when we start breaking the low here. And then if we come down here, I'll definitely be at break even, and then just see if we follow through. And if we do, great. If we don't, it was worth the try. But yeah, guys, I'm going to bounce now. I hope there was a lot of value there. I'm going to do my meditation. So I look forward to catching you all in the next one. Yeah, let's see how the day ends. I'm going to manage Aussie's 200 well. Got some good management on this. We'll see. All right, sweet guys. Thank you. Catch you guys in the